just asking, did you look at the 15-minute to set up the like the areas, the zones of interest or where price will probably come back to? So you look at the 15-minute to set those areas, and then you look at the 4 hour to look at
Yes.
movement.
Right. So it's basically split into two different time frames, the or sets of time frames. So basically anything from the 1 hour below, that's going to be our micro time frames. That's going to determine what price is doing on that day, how is price respecting these levels, how can we get in for an entry. And then based off of that, from anything above the 1 hour, so 2 hour, 3 hour, 4 hour, I'm usually using the 4 hour to determine that's our macro time frame, and I'm using that to determine um, where is price at in the market as far as structure. Are we in a buy or are we in a sell? So that's going to tell me that. And depending on how well you understand it, I'll be able to show you like, okay, is today a possible reversal day or not? Because that's pretty much where the strategy, I would say, fails, or you will take more losses, is not being able to determine, okay, I might be in a buy, but is price currently reversing? And that's something I'm gonna show you as well.
Okay.
So
So like as you were saying, when
What's going on YouTube? Today is going to be a really special topic that's going to help a lot of you guys. I actually had a one-on-one session. Shout out to Pamela. She asked a very great question: how to determine the difference between macro and micro structure. So let's get into it. So macro is actually going to be everything above the hour one time frame, and the micro is going to be everything below the H1 time frame, and that's going to be for our entries, and then everything above is going to be for our structure and determine structure. So if you see of this little diagram that I got up here, let's just say first for a buy scenario situation. These green lines, they represent a buy trend. The red is representing a downtrend. So if we start here on the buy trend, let's say we've been coming off a downtrend, and on this downtrend, we made a high before creating a new low. So on the macro time frame, so anything above hour one, when price comes and breaks above this level, breaks and closes. One thing you have to understand is that price has to close. It can't just be a wick above, because that could be a rejection. So price needs to close above that break of structure. And from that point, what we need to do, this is not our initial entry at this break. Maybe if you're a breakout trader and you get a close above, then you can potentially take that. But the way I personally trade, I'm waiting for an order block to be retested. Now that I got my sense of direction, I'm waiting for price to come back into an order block test, and then we get in on that next push. So understanding this. So what I have marked up here, don't laugh, guys. These are just, fake candles. So my favorite pattern would be the continuation pattern of a bullish, bearish, bullish pattern when I'm in a buyer's market. So what I'm going to do on my higher time frames, let's just say the H3 time frame, H4 time frame, I'm going to mark off this order block. So when price comes back into it, as long as this low is maintained, I know that I can potentially get into a buy trade once this level was tapped into. So what we want to see on our smaller time frames as price gets into this level is a transition. So once we tap into this level, let's just move it over here to the right. On our smaller time frames, we want to see price come into this point, make a high, make its lower low. Once we get a break above that previous high, a retest, and price did not take out that previous low, somewhere around here is where we get our entry, and then we're going to take price up to a new high, taking out the last previous high. So once once price gets to this point and we get that nice transition, that break, and then we maintain the low, our entry point is always somewhere around here, and we come in and we get in on this next higher time frame leg of structure. And these higher time frame legs of structure can give us big and strong pushes in the market. So it's very important to let price, come back, tap into these type of levels, and then we're going to take the next ride up. So we determined that the macro was bullish. It was pulling back to a level of demand. we get in that, and then on our smaller time frames, let's just say for this example, the 15-minute, we wait for this transition, get back in here, and we take price to the next level. And the same thing goes here. So once this new high gets created, once this new high is created here, we do the same thing. We mark up order blocks, and it's never going to be at one certain spot or another. It could have been down here, it could be here. As long as this low is not broken and maintained, we can get into a buy. So when price gets back to that point, we do the same process. And every time price gets to a level, the transition is different. It might just chop around down here at the bottom for a little bit. It might go a little bit past it, then break structure, then get on a retest. What you're really just waiting for is to see a low be created, price to take out a short-term high or a smaller time frame break of structure. We get in as price is retesting and showing rejections to show us that price is going bullish, and then we get in for that next leg of structure to the upside on the higher time frame. And since we know that we're on the higher time frame, we can actually hold these trades longer, knowing that we're in the next leg of potential structure to the upside. So if we look at a couple so if we look at a couple examples of how do we determine the same thing but with a downtrend. So on the macro time frame, anything above H1, what we want to see is once a low gets made to a new high, once this low is broken, not wick below, it has to break and close below this level. Once we see that, now all we need to do is wait for price to pull back to some type of order block, or my favorite pattern, continuation order block, which would be a bearish, bullish, bearish pattern when we're talking about sales to the downside for us to get in on this downtrend move. So we mark this up. Same thing applies, guys. When price gets to this point, we want to see price come in, create some rejection, maybe even push past it just a little bit, reject from the top, come and break structure. Once price gets back, to retest this level as this high gets maintained. Now we know that the bears are in the market as we're starting to get rejection from this point. And then we take price down for the next leg of structure down to this point. And then the process repeats itself again. So from there, and a lot of people ask, well, can I catch this move back up to this point, or catch a buy back up to this point, or let's say we were here and taking it down for a sale. Now you can, but the only thing with this is we don't know how far price will want to retrace, because it might be an order block here, it might be a continuation here, it might be one up here. So depending on, or it could even just be a smaller one here, and the buy move wasn't as big as you determined, and then now you actually lost because price didn't even continue to push up as high. So you could probably do that for scalps if that's something you like, because we are playing off a higher time frame here. So you do have room to buy this to the upside and then catch this to sell off. So it's all depending on how you like to trade the market. I personally will trade both ways in certain situations, but most times I'm trying to flow with the overall momentum, because if I know that the overall momentum is down, if I do get some type of transition, let's say a 15-minute break of structure, okay, then I'll buy this up to this point, and then once we transition back bearish, I know overall we are in a downtrend, so I want to continue to stick with that. So same process again, guys. Once we get tapped into this level, we get some type of transition, price makes a high, break structure, comes back. This is our entry here, and then we take price for the next leg of structure. So it gets very simple, guys, once you can understand this and determine where you want to get in for your buy and sell entries. So now let's look at an example or two of a buy and sell scenario. All right, guys, so let's look at a sell scenario here on gold first. So right now I'm on a 3-hour time frame, that being our macro time frame. So we see our highest closure from this point is at this high here, right? So once price closes below this level, this is actually a break of structure. So once we get this close of price here, the price has actually broken structure to the downside. So now we understand, okay, we are in a downtrend market. Now what we have here, similar to that continuation order block, but it's just a bearish, bullish, bearish, but this third bearish did not engulf, but still all the same, it's not as powerful as a actual bearish engulfing continuation, but it's still a bearish order block sitting at this level. So if we look and let's say before we get to this point, right? Before we get to this order block, we're waiting for this level of supply to be tested, and we want to see how price reacts to it. So this is when we go down to our micro time frame and we determine and see how price reacts once it gets here on the smaller time frame. So if we just play this out here on the 15-minute, as price is approaching this level, what we want to see is that same type of transition that we've seen in the example above. So if we just watch this play out, we can see that we get a nice left head, right shoulder right here in this pattern. Let's just say we decided to enter there. We decided to take a short position here, small stop loss. We already got a huge trade down, and we can even consider looking at, the higher time frame, because we know that we're potentially getting in on the next leg of structure. So we can say that we determine that price is going to take out this new low and create this previous low and create a new low. And price did just that. Let's see, did it actually close there? Yeah, so once we close, now this is a new low, 1 to 10 restore roar, just based off of waiting for price to tap back into these levels of supply that are created now that we are in a downtrend market. Now, let's try to see if we can find a buy scenario. I believe I have one marked over here. Let me actually close this. So yeah, let's look at this one to the right over here. And this is a better example of that continuation order block. So if we look at price structure, right? Even if we look at from when price came, tapped back into this downtrend, we've been moving to the upside. We know we're in a uptrend market. We're, breaking structure to the upside. We're maintaining bullish pressure. So we know we're in a buyer's market. So where do we want to get in at to continue that? So what do we have right here? Within this bullish leg of structure, we have a bullish, bearish, bullish continuation pattern. So with that pattern, when price comes and taps back into it, all our job is to see how price reacts from that point. So even if we go down to something like the 2-minute time frame, it could still, anything on the macro is gonna really help you determine, the order flow position. And as you get better at looking at the market, you can do a 2-minute, 1-minute entry. You don't have to wait for that 15-minute transition. You do want to get your confirmations depending on how price is reacting from those higher time frames, but you can get those 1-minute, 2-minute, 3-minute entries. So if we look at this from this low, this is our high point. Even these highs are short-term highs. We click the 1-minute, we can see this is the actual high from this low. So from this point, we can just determine once price breaks above this and gives us a nice confirmation, we can get in for a buy trade. So we got that break above. Let's see. Then we finally get, another engulfing just to kind of confirm, and you can see where the price come to. Another continuation pattern came, tapped into it, create a bullish order block. So from this point, you can either enter here, right on this bullish order block, or right below the previous continuation pattern to just give you more confluence and, to protect your order. Now, where are we going to target from this point? We're going to target the actual previous highs, which are here, because we know we're in a potential next leg of structure. So doing this, let's just say we did a 1 to 10 and we hit play here. And we're coming off a higher time frame, so sometimes it takes longer, but you guys see how powerful this is. Just understanding our macro time frame is doing either buying or selling. So we need to find within this structure, where will price retest? And then we need to get that confirmation on our micro time frames, anything below H1, to see that transition for a move up. All right, so hopefully that helped you guys, utilizing the higher time frames to understand macro structure and then micro structure to get that confirmation in detail with our entries. Definitely utilize the one-on-one sessions. They've been very helpful for my students, as well as Pamela. She asked a great question. So as always, guys, invest in yourself. You can get 20% off again, the live trade room. I'm calling trades like these every day, every week. You know what I mean? I don't win every trade, but we've been doing really good in the live trading room. So see you guys in the next video.